Welcome to Rabo TV, unearthing innovations from the paddock and beyond.
Today we're talking cattle prices and the latest in global markets.
First up, we're talking with Lee and Cassie Coleman, grain growers from Cropper Creek, New South Wales, who developed Farm Simple, an app designed to help farmers become more efficient. So what inspired you to create Farm Simple?
We came home 10 years ago to farming, and my grandparents had 60 years of history written down in their diaries, and we just had no access to it. So we got busy doing exactly the same thing, writing it in our top pocket, and we had no access to it, and our staff had no access to it. And from that, we looked at what products are out there that can fit the bill.
I was forever chasing timesheets so that I could pay the staff and tracking down grain movements and entering it manually into Excel. And it was a very delayed process, and we were always looking in the rear view mirror, and we couldn't focus on building our business. We looked everywhere for an app and couldn't find one, so out of probably pure frustration, we had to build our own.
So what are the practical advantages of using Farm Simple?
One really practical example is storage for us, grain storage. We have some large silos on farm, and we've had great examples of filling those storages and then going to 3 or 4 contracts out of that storage and being able to manage our commitment so we either don't undercommit or overcommit and know exactly where we are on delivery.
The other good thing is that we've got the chemical inventory on there, so our agronomists can see exactly how much chemical we've got on farm and what we might need for the next spray recommendations. And by sharing our notebook with our staff, we've managed to get they're engaged with our business, and they offer input into the planning, and they look for areas that need improvement, and it's really opened the communication channels.
They see what's coming up, they can read what's on the forecast, what's on the job sheets, and they're planned for next week already because they know what's coming towards them. Look, one of the biggest things on that is capturing the data at point of execution. So one of the hates of farmers is we're geolocated, we're all over the place. So if operators can put it in at the time of doing the work, whether I'm loading a truck, whether a guy's driving a spray rig, that speeds up the process so much. It's one-time entry instead of us putting paperwork back into the office and then someone sitting down and doing it again a second time.
So what about from a business perspective?
Look, one of the things, as my background as an engineer was, I was used to benchmarking businesses, and being a high input, high output business, agriculture has a huge demand for benchmarking. We've been benchmarking with a company for 10 years, and it probably really lent us towards designing this product to suit that well. So to be able to drive out of the paddock at the end of harvest and have 90% of the info already in a format ready to benchmark really speeds up that process of reviewing your business, even down to talking with your bank and talking with your agronomist. That sort of tool is really, it presents very professionally, but it also gives you big efficiency. Instead of having to thumb through your notes and go, what did we grow, what was the tonnage? You've got that information at hand. That
all sounds great. How is it different from other apps?
Well, we tried many apps to cover all the areas of our business, and to keep that many apps updated was just impossible, and we couldn't get the buy-in of our staff. So to bring it all into the one place and where they're going to get paid out of as well, it really encourages them to get on and use it.
And designing the app in the first place that it looks after operators, not the manager. That way all of the data gets put in the first place. And that's easy to say it's built by farmers for farmers, but it's probably built by farmers for operators. And then the farmer gets the efficiency and the benefit out of it.
Thanks so much for joining us, Lee and Cassie. Looks like you've solved your own problems on farm, and a lot of our farmers will benefit as well.
Thanks so much, Claudine.
And the Rabo viewers, it's really good to talk straight to farmers.
Great to see farmers taking things into their own hands, Claudine, and hundreds of others are already using this as well.
Absolutely, Ben. Let's take a look at the markets this week.
Well, it's been a story of consolidation over the last week in financial markets. A third wave of infections in Europe has dented some of the vaccine optimism that had been buoying markets in recent weeks, and has contributed to recent sell downs in both the stock market and commodities. The rise of new, more infectious variants of the virus has been a key driver of the increased case numbers, and a slowdown in vaccine rollouts following temporary suspension of the AstraZeneca jab in parts of Europe due to reports of patients developing blood clots following inoculation have not helped market confidence. There was some good news late last week for the Australian labour market, however, with new job creation in February smashing expectations. Surveyed economists were expecting about 30,000 new jobs to have been created in the month, but the actual figure came in at almost 89,000. Those were almost all full-time positions as well. As a result, the unemployment rate had a big drop from 6.3% to 5.8%, and we saw Australian bond yields climb a little as traders factored in the better data and what that might mean for wages growth further down the track. The good news in the Australian labour market may prove to be a little short-lived though, because the JobKeeper program is due to finish at the end of the month. Economists are forecasting that anywhere up to 250,000 people could lose their jobs once the support disappears and businesses are forced to stand on their own 2 feet again. The boffins at the Treasury and the Reserve Bank will be hoping that the economy continues to surprise to the upside and that the real figure will end up being much lower. Only time will tell. Australian retail sales figures for the month of February were also released last week and came in quite a bit weaker than expected. The market had been looking for growth of about 0.6% for the month, but the actual figure came in at negative 1.1%. The snap 5-day lockdowns in Victoria and WA weighed on the result, while Queensland and New South Wales both saw decent growth. All else being equal, we should see retail sales rebound when the March figures are released in a few weeks' time. The Aussie dollar is little changed at 77.40, crude oil is fetching $64.50 a barrel, and December 2021 wheat futures are dealing at a little below 300 Aussie dollars per tonne. And that's finance.
Thanks, Ben. It really is good to see more people back in work.
Yeah, it's really great signs, Claudine.
And now over to Angus for a beef update.
Thanks, Claudine. Australian cattle prices remain at record levels and they are some of the most expensive in the world at the moment. The reason for this is the historically low cattle inventory and favourable seasons in many parts of the country that have driven very strong producer demand to restock. So Nigel, what are your thoughts on cattle prices and the availability of stock?
Availability has been very tight. I would say there's probably been a slightly lower volume of interested buyers at the market rate. You could nearly pinpoint people that are back in the market at these high prices are probably those that are fortunate enough to be selling on that market as well. But we're certainly in record territory.
Thanks, Nigel. The Australian cattle industry is currently in a pretty unique position, or at least one we've not experienced in decades. Last year we saw our lowest male cattle slaughter since 1986. I use male cattle slaughter numbers as an indicator of the number of breeding cattle in the system. Because if you assume that all male cattle have a finite life in the system for about 2 years, then, along with assumptions around branding rates and death rates, you can estimate the number of breeding cattle in the system 2 years earlier. The 2020 slaughter numbers tell us that we currently have one of the lowest breeding herd numbers in many years. Official numbers had the Australian cattle herd at 26.4 million head and about 12.15 breeding animals in 2018. Based on an estimated branding rate, this should have produced about 4.62 million cattle, but we recorded a number of 3.4 million, suggesting official figures might be overestimating how many breeding cattle we have out there. If we go back 35 years to when we had a similar male cattle slaughter, official figures showed a breeding herd of about 9.96 million head, or 2 million less than what official numbers suggest is out there now. So, potentially this hole in the Australian cattle herd is much larger than we think. Normally, we presume a recovery would take about 3 to 5 years, but it is highly likely that we're in for a much longer process this time around. Compounded by the fact that we believe many producers have and continue to take advantage of higher cattle prices to fatten and trade cattle rather than necessarily focusing on rebuilding breeding numbers.
Thanks so much, Angus. It was great to hear Nigel's perspective from the ground.
Yes, it was. I think such a long rebuild means that cattle supplies will be limited for a number of years. If you're a breeder, rebuilding your herd, now's the time to make those important decisions on your genetics and your future markets. For backgrounders, in this high price environment with scarce cattle, supply chain relationships will be critical.
Thanks for joining us. We hope you stay safe and dry.
Follow us on social media for all of the updates, and we'll see you next week.